We're taking a look now at Zambia's economic situation. Of course, that with consumer inflation numbers having come through and showing a slowing sharply to 6.4% year on year in January from 7.2% in December. Joining us to discuss this is Yvette Babb, emerging market strategist over at Standard Bank. Thanks so much, Yvette, for joining us this afternoon. Let's get straight into it because we've had Zambia's inflation number come in at 6.4% year on year in January, and that from 7.2% that was recorded in December. Quite a dip back that we're seeing in that inflation rate. In line with your expectations?
Well, the first thing to note is that Zambia has actually had very benign levels of inflation on the back of positive food harvests over the past 4 years. So food inflation has remained in single digits, contrary to what has been the case in other East African countries, for example. With regards to this specific inflation number, it's not actually very comparable to the previous inflation number because they've actually made significant changes to the way in which they measure inflation. So this 6.4 number is not actually directly comparable to the 7.2 number because what they've done is they've actually changed the statistical method at which they use for the calculation of inflation, while they've changed the composition and the weighting of the very elements of the basket. So this is going to make a change in the way inflation progresses moving forward, with the most notable change being an increase in the number of categories or sub-indices of the index from 8 to 12 indices. We've also seen that obviously the weight and the distribution of categories has changed, and it seems to imply that under this measure the weight of food has declined. The weight of food has declined less than we expected. It was under the previous measure 57% of the overall basket. Under this basket it seems that it's 52% of the overall basket, which still means that it's on the high side when we look at the composition of African CPI baskets. If we look at, for example, Uganda, it's as low as 27%, or even South Africa, where it's in the low teens. So the weight of food is still quite high in this inflation. If we look at the development of the various sub-indices in terms of the level of inflation that we have been given under this measure, another notable difference is that the category that has been created around utilities, fuel and rent, has seen a much lower level of inflation as was under the previous measure. So it'll be interesting to see how we can explain exactly how the inflation has declined from the high teens to, in this measure, a low teens measure. Yeah. The way in which they've changed the measure of inflation from arithmetic mean to geometric mean does, however, imply that there are some upward biases in the previous statistical method of calculation that have been removed through this new measure.
What's interesting, Yvette, is that the state agency has said it's rebased that CPI index back to 2009. Explain to us why and why that period was chosen. What's the rationale for going down this route specifically?
I think what's more important, I think the base period just implies that that is the base year in which they use to calculate. So basically all indices are 100 in the year 2009. What's the more important change is actually the use of the survey that they use to base the composition of the CPI index in. So we previously had a CPI basket that was based on an expenditure survey from the early 90s, so 1994. What they've done is they've now used a survey from 2002, 2003, which gives, I think, a more up-to-date indication of how the expenditure profile of an average Zambian looks like. So the base period of 2009 doesn't really tell us a lot, but whatever it does tell us a lot is that this is perhaps more reflective of the true costs of living for an average Zambian because it is closer to the actual expenditure profile based on 2002 rather than 1994.
Well, Yvette, just yesterday we were talking about the mechanisms that the finance ministry is bringing into the economy overall, and a rebasing of the Zambian kwacha is amongst the lot. What kind of impact do you see this having on inflation moving forward? Because it's said to have quite a dramatic effect on inflation and this entire scenario from here on out.
Well, the redenomination of the kwacha basically means that they're moving the decimal point 3 spaces up. So in terms of actual value of the currency, I don't really necessarily feel that it have a great impact. It obviously does perhaps have a greater impact on the perceptions when a currency moves from 5.6 to 5.7 rather than 5,600 to 5,700 could have quite a large perception index impact on both local participants in that market as well as foreign participants. Whether the kwacha actually depreciates or appreciates will very much much continues to hinge on the stance of monetary policy combined with the stance of fiscal policy. And in both of those instances, we've seen a loosening of policy under the new regime. So the fiscal measures, for example, that you mentioned before, indicate that there will be more pro-poor spending, at least implied under the greater allocation of funds to education and health. We've also seen that they aim to increase the expenditure on infrastructure. So these measures, could help support the agricultural import subsidy program, which has been beneficial for the cost of food, and while removing some of the bottlenecks in the infrastructural sector, particularly in the production of electricity. And these structural bottlenecks could be relieved by some of this public expenditure.
Yeah.
In terms of monetary policy, obviously the lower rates are less supportive of the kwacha and could actually open the kwacha up for upward pressure.
The net cost reduction, though, that this entire move is expected to have on the economy, because it improves efficiencies, for example, of doing business in the country, is envisaged to tone down inflationary spirals. So run us through that impact as you see it.
Well, perhaps you could have indeed that, menu costs, the printing or the installation of systems whereby you have to accommodate for 4 digits. Now it's reduced, and you can easily accommodate for a lower denomination. It will, of course, have once-off costs in order to adjust all systems, as well as reprint currency, as well as reprint all menus, anything that reflects something in the old denomination of the kwacha will need to be reprinted. So there will be a once-off cost in that adjustment. But you could argue that in some ways it could reduce transaction costs moving forward.
Yeah, of course, that has been the big point that's been highlighted. Yvette, overall, in what kind of growth scenario? Because we know that Zambia posted an economic growth rate of 6.5% in 2011. It surpassed the revised projected growth of 6.4%, but it's still less than what the country achieved back in 2010, where we saw growth come in at 7.6%. What's your outlook moving into 2012? Because even at 6.5%, that's pretty impressive.
Absolutely. I mean, very many European countries would be jealous of that number, of course, but it's a different context that we were coming off from a relatively low base. We are fairly bullish on the outlook for economic growth in 2012, not least because of the expansionary fiscal budget that we discussed earlier. So both the recurrent expenditure as well as the fixed capital investment by the government is likely to be supportive of growth in 2012. Secondary, obviously, the inflation numbers that we have been seeing to date have been fairly benign. The low levels of food inflation have supported personal disposable income. That's likely to continue in 2012 as we expect the harvest to remain on par this year, proving them to be another year, or providing them with another chance to be a net exporter of food in the seasons to come. And then not least, we also expect that there will be considerable foreign direct investment in the Zambian economy and the development and expansion of mining operations, so that foreign direct investment will definitely give quite a substantial boost to economic growth. And that will also reflect in the export numbers, whereby we're seeing greater export of the primary commodities, obviously predominantly coal, whereby output this year, could slowly veer towards the 1 million metric tons per year.